Okay, well, thank you so much for inviting us. We're very excited to be here. We've actually formed our business for about a year now, mainly because we saw a lot more activity in this space from a city perspective. A lot of cities are becoming more and more lean in. You hear it on the news a lot. But the information out there is all over the place. And so what we wanted to do as a business is really help educate people about, one, the opportunity of why people are doing it today, but also helping them from the very beginning of just an idea to actually getting this fully built and potentially rented out or have somebody move in. So we're very delighted to be here. So we have a pretty packed agenda today, so we'll do as much as we can in short order. We'll talk about a little bit about the team itself, my roles and responsibilities, along with my partner Kamal. We'll talk about why people are building an ADU today, different local ADU laws. We have a few cities that we want just to showcase, but you'll see every city has its own requirements, every city has its own restrictions, and so it's really important to have the conversation with the city or ourselves about your particular case, and then we'll go over that later. We'll talk about a little bit about the ADU financing side of it, just so you can see visually the numbers and why people are doing it. Talk about ways of constructing an ADU. There's a lot of interesting methodologies from a manufacturing perspective today. Many may have seen different types of ways of prefab and things like that. We're happy to share with you a little bit of what's really happening and what may be happening over the next few years. We'll talk about process and planning, working with a contractor, things just to be on the lookout for, whether you decide to work with us or work with somebody else, just to protect yourself. We'll showcase some of our recent projects, a little bit of why us, and then next steps. If you're still around, you're still interested in learning about the process, we'll talk about how we typically engage with customers. So our background. We came from a very different space. So myself, born and raised in the Bay Area, I came from tech. I was in enterprise startup software sales for the last 11 years. I actually got into real estate first through investing. I was buying properties out of state. So I knew a lot of the mathematics in terms of returns, whether you're looking in Texas or the Midwest or in Florida. And when I saw the numbers there and the cap rates and different things like that started to change, I was looking at different opportunities potentially back here where I lived. And that's how I discovered and wanted to work on this business venture with my partner Kamal. It's very, very hard to find a general contractor that is focused for the long term. Mainly could be related to their backgrounds. And so it just happens to be a big fit. We saw the same kind of vision of the company and where things are going and where this can be a very sustainable model. And so our goal now is to help educate and let people know about it. As an investor, we're also looking at properties ourselves to buy a home, build an ADU. You just get a lot more cash flow that way than just owning a single family home. So even from a finance perspective, it looks pretty interesting. And I'll show you a sample calculation, and of course your miles will vary depending on the property itself. So why are people building an ADU? Many different reasons. Some want an additional source of income. So some say this is a great way to help lower their monthly payments. It's an option to potentially, this becomes more of a tax-related thing, but I've heard it from my own CPA. There is a state and local sales tax limit of about $10,000. And so there are different ways of potentially using that income, because now it's investment property, to help lower that amount that you're actually paying and can deduct. So there's a lot of interesting things that are coming out of reasons why people are doing it. Some, it could be for parents. I know many people that want their parents close, but not too close. So that's a pretty common way as well. So people may build out this separate in-law unit so their family members could move in, or it could be their kids could move in. They may not be able to afford or want to buy another home for their kids that are in college, so they instead want to build this smaller home so they can move into that, so they live separately, but still together. Potentially, they don't want to sell their home, but they may actually decide to build up a small home for themselves and rent out their primary home, their larger home. That's another option that we see. And quite frankly, it's just leveraging the space that you already have. You may have a big lot. You may just want to find different use to use it more efficiently. So those are some of the main reasons of why people are looking at ADUs and looking at this as an option for them. So we pull this up, and then my partner, when Kamal comes up, we'll talk about some around here. But the main thing just to note is that every city is slightly different. So you just can't assume every city is exactly the same, right? Looking at these 3 different cities, minimum lot sizes are all different, right? Some assume that you need this 10,000 square foot lot to be able to build an ADU, which is just not true. Over the years, and even over the last few months, we see more and more cities just becoming more relaxed about that, for various political reasons, but also various reasons on creating more housing. And so you can see, even in an area like Palo Alto, they have no minimum lot size, right? They don't need a 10,000 square foot lot to be able to build an in-law unit. There are requirements, though, in terms of how small or how big an ADU can be. So you just can't build another home next to you. So there's a max typically for most cities. But then, and you'll see on the second level, there could be different height requirements for in-law units. There could be parking lot requirements, right? There can even be different owner-occupied situations. Right now, San Jose is in a situation where you can build out an in-law unit, and then you can rent both separately to different tenants. It doesn't have to be owner-occupied, right? Which is very different than most cities. So from an investment perspective, if you think about it, it technically makes every single-family home virtually like a duplex, right? Because you're having 2 sets of renters. And not a lot of people know that, and more people will eventually know that. So it makes it pretty different, and it's something to think about if you're planning to invest or buy single-family homes. So the note is that there's differences. The thing that is in common are you can typically only build 1 ADU per lot. So you just can't have a massive lot and then build a bunch of these and start renting them all out. So you can only build 1 ADU. So this gives you a general idea just in terms of the cost structure when it comes to an in-law unit. Now, this will all vary. So when we talk about an ADU, it typically means it will have a kitchen and a bath to it. And so that can be done in different ways, and there's different city requirements based off of the different ways of doing it. So you can build a detached unit, so that's a separate standalone structure. You can do an expansion, so you can add it to your primary home, right? And then the other option is you can convert space to make it an ADU. So many cases could be a conversion of a garage. It happens a lot in San Francisco. It could be converted even of your primary home. I've actually had a friend that bought a single-family home the way that it was laid out. They just attached a kitchen to it, and then they used the existing rooms, and now that's an ADU, and they blocked it off, right? So there's a lot of different methods and different ways to have a legalized in-law unit. But this at least gives you the high level if you were to do it as a separate unit, right? So it's detached, it's not part of the house. So you can see where the general costs are coming from. It could be from the framing perspective, which is about 30%. That's actually related to wood and different materials on the framework. The foundation is typically the next the next line item. Interior finishes, trenching. So the distance between your primary home to the in-law unit itself matters because of the wires and the plumbing to attach to the primary home. So there is a factor there, and then you'll see there are different things. When we give out quotes, we're not going to break it down like to this level, but at least it gives you an idea where the construction budget is and how we come up with our numbers. So what I want to do is just use some quick math so you can just visually see. Many of you have properties, many of you have investments in and out of state. And so feel free to use a calculation similar to this, and you can determine pretty quickly why it's really blossomed over the Bay Area. So this is an example just in Palo Alto. We just looked at a house size. This was on the market, and it's sold for a few months now. But a house size was 1,655 square foot. The lot size itself is about 6,100. So based off of the math of the Palo Alto rules, you can only build a max of 35% of the lot size. So there is a certain max of how large you can build based off of this example. So you can see the ADU was built of a size of about 445. That's the max you can do in this particular address. So we did some sample just calculations, right? What is kind of the effect if you're before an ADU and after an ADU? What is the potential change in value? Obviously talk to your realtor, and they're happy to give you, comps or give you an idea of the feedback related to the increase in value. But generally, because this is all legalized, permitted space, it does count towards the square footage of the property itself. So just know it's not illegal or unpermitted space. So you'll see a potential increase of value there. You'll see the breakdown that we have related to the cost of this kind of project. What we call a soft cost, that will be a combination of the fees for architects, the fees related to the city. Those are the things that are typically soft costs. That may take, depending on timing, it may take 1 month to maybe 6 months, just depending on the cities. And then you'll have the majority of the other costs, which is related to the hard costs. That's actually the construction side. So you'll see while the total may be X dollar amount, let's round it up, let's say it's $200,000, the bulk of the money, the bulk of the expenditures doesn't come until once you have the permits and you're ready to build. So something just to know as well when you finance, when Melissa talks about options, just know you don't need to necessarily pull $200,000 from day one. You have time before you actually start in the construction piece. And that's where majority of the costs are these days. So you can see kind of the impact right away, right, in terms of cost relative to the increase in value. And that's just kind of one potential variable. And then if you're renting it out, that makes things fairly interesting as well. We just use an example here where you're actually paying interest, which is if you took a HELOC, which is an option that some of our customers are using. So you can see rents in Palo Alto are very high. Different rents are estimated at different cities. You can see the reassessment of the property tax when you add in this additional structure. We'll go over that later on, including property insurance, vacancy, and even including a HELOC. You can see that you're still actually cash flowing for this project, which is extremely, extremely rare in the Bay Area, period. And so that's one, even assuming you're 100% financed. So you're 100% financed of $191,000. And you can see what your cash-on-cash returns will look like if you were not financed. So if you happen to have that in stock or in a bank account and you're able to fund it yourself, you can see that the cash-on-cash returns relative to the rent. And so this is why financially it's very interesting. And most people, quite frankly, don't see this or understand the math behind it.
So can you read out the highlighted numbers just for the people in the back to know what you...
Yeah, so there's a couple of highlighted numbers. There's the one on the left-hand side. It was the increase in value because you're adding significantly more square footage to the property itself. So as I mentioned, talk to your realtor in terms of how you want to assess that. Every property will be slightly different. You can see there's an ROI figure on completion. So the cost is about $191,000 in this example. The increase in value immediately in doing this in-law unit project. So you can see the type of immediate returns when it comes to even doing it. And then on the right-hand side is actually the cash flow piece of it if you're actually renting it out and generating cash flow that way. So there's the numbers of $11,000 annually if you're 100% using a HELOC, so you're actually putting none of your own money down, or 13% cash-on-cash returns if you're funding this project yourself using your own capital. Right, so it's actually, quite frankly, for those that invest, especially in out-of-state, it's very, very favorable, and it's very interesting that I've personally seen, and we personally have our own clients share some of their figures. So this is a little bit about the financial side of it. So what we're going to do now is we're going to switch it over. I want my partner Kamal to talk about it. He's a general contractor. He's been in this business for over a decade. So he'll talk about actually the ways of constructing, and then we're happy to answer questions at the very end.